Hi, this is Zach here with the Bulletin Board Heroes here at Vox Markets. It is Friday, the 14th of January. Starting off with AsiaMet, where you can see the shares have been in a rising trend channel from the end of February, and just breaking that line of resistance from November around 2.5 pence. Above that on an end of day close basis, looking at the top of the channel, 3.6 pence, maybe to be hit as soon as the end of next month. In fact, early back below rather the floor of the channel, 2.4 pence, really delaying the recovery scenario there for AsiaMet. Onto a stock which doesn't have that much charting furniture, but recent calls on the stock seem to have panned out. We had that bear trap below the old August support there at 2.15 pence. Snap back above that pretty quickly, and especially to start the year. And the view now is that above 2.15, we should be heading up towards that July resistance line projection as high as 3.5, maybe as soon as the end of next month. Moving along to Bidstack, and here stock continues to defy the cynics. We had that vertical move higher on the 10th of December, which was really the turnaround day for this particular stock, breaking back above the 50 and 200-day moving averages. What's interesting now is that we've got support coming in at the high of that day. So that came for January so far around 4.2 pence twice now. We've had that. And above 4.2, looking for not only 6 pence to be retested, which is this month's resistance, but also perhaps as high as 11 pence over the next 1 to 2 months, especially if we can get a quick break of 6 pence over the next week or two. But everything here hinging on 4.2 pence holding, and as things stand, it looks as though that will be the case. On to Clontarf, which has been out of the limelight for quite a while now. We've had that slow drift since July, but today sees the shares break both the 50-day moving average and the July resistance line at 0.25 pence, and above that looking for 0.35 maybe by the end of next month, and only obviously back below recent support at 0.22, really delaying the upside scenario. To add to the mix on a bullish basis, we have bullish divergence there with the uptrend line in the RSI window, which contrasts with the downtrend that we had there in the price window. So the bullish divergence should win out and push shares of Clontarf higher. Onto a stock that I don't think anybody talks about, perhaps not even the management of the company itself, Cornerstone, but good news here on the technical front. Last month we saw a break of the 50-day line and the August resistance line there at 27 pence, and we've had a gap higher today. That should allow us to move through the initial January resistance at 37 pence. Above that, we're looking for 50 pence, perhaps as soon as the end of next month. If you're a bull of the stock already in there, then only an end of day close really back below the floor of the gap, 33p, really delaying the upside scenario. Onto a stock which is sort of something to celebrate, I suppose, given the recovery that we've had so far this year. Shares gap through the 50-day moving average on Coppel. Nice bull flag here, right, base really just below 30 pence, and a weekly close, I think, above the 200-day moving average level at 32.3 pence should be enough to then give us a follow-on move towards 50 pence, which is the 1 to 2 month target there, the top of the August trend, the August triangle rather, and a decent near-term target for the shares, especially given that gap high, the unfilled gap to the upside we had after the bear trap below 20 pence. Another stock which is in rehabilitation mode is Falcon Oil and Gas. Pretty impressive here with a break of that resistance line there from September, which I covered, I think, yesterday or the day before, something like that. 8.6 pence, the broken resistance line there, and above that, looking for 15 pence, basically retest of September resistance well before the end of next month. In terms of the stop loss, probably back below 9.5 is probably the tightest you can have it there, but looking very constructive for FOG at the moment. On to a stock which is also looking healthy, Logistics, breaking that line of resistance there from back in March at 13.5 pence, and above that, on an end of day close basis, we've got the prospect of a 1 to 2 month target here as high as the top of the March trend channel at 20.25 pence, and maybe that's for the next 1 to 2 months. Only back below 13 pence, and the 200-day line really delaying the upside scenario. Metal NRG back as well, looking healthy. Here we've got a situation where we've also broken a line of resistance and the 50-day line. You see the pattern here all over the place. March resistance line there at 0.31. Above that, looking for the 200-day moving average at 0.49 initially, maybe over the next 2 to 4 weeks. Best case scenario, the next 1 to 2 months, as high as 0.8 pence at that May resistance line projection. I'm really bullish while we're above 0.3. I think that's the safest thing to say on that one. Another stock which I don't think anybody looks at, or very, very few people look at, is MJ Hudson. Here we've got a situation where the shares not even appearing on my screen actually, but let's see if we can get some action going on this stock. On to another rather quiet situation, MJ Hudson. Here we've had a sort of a near-term bear trap there below the 40 pence level, but snapped back quite nicely today. And above 40 pence on an end-of-day close basis, we're looking for at least a return towards the 50 pence area, which was the initial resistance back in October. The other exciting part here is the way that we've got an uptrend line in the RSI window, which is suggesting bullish divergence. The lower low for December, for January rather, versus the November support there on the oscillator. So that bullish divergence could help the shares quite significantly. A couple of situations to go now. First is Scott Gold, which had an announcement today, and here you can see that the shares have gapped up after that announcement, gapped up from the 200-day moving average at 65 pence. Above that, we're looking for the top of the rising trend channel from April as high as 95 pence, maybe by the end of next month. Venture Life is next, and here you can see that we broke that line of resistance from back in August at say 38 pence, gap through the 50-day moving average, which is very impressive. Above the 50-day line and the floor of the gap at 43 pence, we're looking for at least a retest of post-November resistance at 63 pence. But what's exciting here is basically the fact that we gapped down and gapped up, so it's an island reversal, and also obviously a bear trap from below the previous support there around 42 pence. So nice setup there on a technical basis for Venture Life. That's it for me today. More updates over the weekend.